thanks for tuning in. I'm CryptoVatsik, and before we get started, I'd really appreciate it if you hit that like button to support the channel, and if you find this content helpful, don't forget to subscribe so you don't miss out on future updates. As always, this is not financial advice and are my opinions only. Alright, let's get into it. Alright, this is going to be an educational video on using support and resistance in your trading, which can be very simple theoretically. However, when you put words to action, it can be more difficult than it seems at times, I find. So I'm going to dive into how you can actually trade this strategy without getting stopped out all the time and chopping up your positions. It can be super frustrating, and I know I struggled with it for a long time until I realized how to not become liquidity for other retail traders. So we're just going to dive right into it. So starting off, let's just do a really quick bit of theory here on support and resistances. Okay, so we've got a wave structure drawn out here, and basically what you're trying to do is you're just trying to find those key levels of support and resistance, right? So basically you're just looking at the lows and you're looking at the highs of the structure and identifying those key areas that are being respected. So you start to look at maybe your first high and just draw a level, okay, and then maybe your next high you'll draw a level, and then your next high draw a level. So you start to see some key areas that price is respecting, right? And so right off the bat, we've got this first level that was resistance, right? We came back down, we came up, people shorted, it came up into supply, and it failed and came back down, okay? And then on the next wave, it broke through, and then what did we see? It acted as support this time. It's no longer resistance. It flipped SR into support, or it flipped R into S, right? So then we get our next wave up, we break this next level of resistance, okay? Smashes that one, and then it's our new support. And then we end up coming into this range where it just can't, for some reason, break this top resistance up here. And so then you start to see maybe a deviation or something like that, and, potentially some sort of top formation. But either way, it's trying to get through this resistance, but it just can't do it. Okay, so we keep ping-ponging back and forth until eventually you see the vice versa of what we just saw there. You come back down and you break this level that is support and turned into resistance, right? And so you start to come back down to these previous levels that you had drawn out, and you start to use them again just in the opposite trend, okay, coming down. And so it flips it into resistance and so forth. Now there's another example here where we can see resistance being tapped on, right, is when we get an ascending triangle like this, okay, and you're making higher lows without making higher highs. And so basically what's price doing? Well, it's being suppressed at this level of resistance. However, we are making higher highs, so the pressure is building on this resistance, okay? So you can imagine like someone's trying to knock down a door, and with each blow the door gets weaker, right? And so we start to see something like this where price compresses, and then you get a final strong breakout, right? And typically with ascending triangles, you get breakouts typically in bullish markets to the upside. And so you can see it on the vice versa as well with descending triangles. But basically the theory, right, is that this resistance is growing weaker. And so you'd expect with a breakout above this level that this level would then act as a pretty strong area of support now at that point, okay? And so quickly the vice versa obviously is just lower highs, meanwhile knocking on that door of support, right? So we're making lower highs with many touches on this area of support, weakening that level of support, right? It just looks like it wants to come down and just shoot down below this level and turn it into a significant area of resistance, okay? Something like that. So, yeah. Now, one final example here is you'll see in very strong trends, either up or down, the vice versa to this, is that you'll see these diagonal lines of resistance, right? So you can see here, obviously, yeah, we're making higher highs, higher lows, it's bullish, but there's obviously this area, some sort of area of resistance where it just can't seem to really scream up past, right? And so we'll see this in bull markets where it'll, be making new peaks, but really just can't get above that diagonal resistance. And then eventually what you can see oftentimes is a break of that diagonal and then turned into support, right? And so we see this oftentimes with Bitcoin and crypto assets in bull trends. And, when the trend is very strong, you'll usually see them. Well, I won't say usually, but when the trend is very strong, they can definitely break up to the upside and turn these diagonals into support, and vice versa, turned into resistance on a bearish trend. Okay. So let's just go through the Bitcoin chart and just start to draw out some examples that we can find on here, right? So just look at this chart and start to think, where are some of those key areas of resistance? Where is price struggling to get past, either up or down, right? Let's go back to our previous bottom, where Bitcoin bottoms back in 2018, okay? This was a very, very key point in the market when we had this ceiling of resistance right here around, call it just over $4,000, right? And this key area acted as resistance. We had broken below, rejected off of it, okay, right here, and then came back down, tried to get up, just struggled to get up there, could barely even tap it, came back down, okay, one more time, came back up, couldn't do it, and then eventually we broke up to the upside. And so if you're looking at this, you could say, oh, okay, yeah, sure. I mean, at a certain point, you would have noticed that it was starting to develop this ascending triangle off of the bottom, right? And so that's fine. I mean, yeah, you could have noticed that, but hindsight's 2020, right? So then you'd start looking at the next areas here, okay? Have a look. Well, obviously there's some sort of resistance going on here, right? We screamed up, and kept kind of getting rejected once and twice, pretty strong rejections, right? So you'd say, okay, there's obviously some sort of resistance right here, right? Until we broke up to it. But then you start coming back to these key breakout areas even later in the future. And so you take these lines and you start to draw them out, and you start to notice that price is reacting, if you can see with that key area that we previously broke out of, right? Came back all the way up here. And what are the odds that it came right back down here and wicked right back to that exact level right here, right? So you see from this wick is resistance, broke out, nice wick, back test all the way up, and then came back down, wicked actually twice, and at huge bounces right off that, right? So these are 32, 33% moves off of this area of support, okay? So that's your typical SR flip, resistance into support. Then, yes, it doesn't mean they can't break, right? So then we came back down. And one of the reasons why I like to draw zones, and especially using order blocks, is because you start to get these deviations, right? So if you had said, oh, okay, this is our resistance right here, so we can't go above that, right? You could have said, we broke below, we go, okay, this is our resistance, but if we go above this level, I'm going to enter, right? And you would have gotten trapped potentially on this massive false breakout in this wick on this candle, right? So what's happening here? Traders are getting trapped in this area, and they're becoming liquidity for people that are selling short, and it's coming down. And so if you're trading this breakout, where do you think most people would put their stop loss, right? If they're trading this breakout, they entered up here and they said, well, yeah, it's not the greatest entry, but it's safe because we've broken above this SR flip. So I'm just going to put my stop loss right below the level. Right below the level, because that's invalid at that point. Maybe you saw a couple candle closes here in this wick, so you said, okay, I'm safe to put it right below that wick, right? And sometimes it feels like the market's just hunting for your stop loss. It's like, why is that, right? Well, there's trapped traders in here that went long. They got in too late, and it's not a confirmed breakout. And then, of course, people are shorting it. And what happens is when these traders, when this stop loss trigger hits, these longers are forced to sell, okay? And so then that just pushes the price even further down. And so those sellers that shorted up here are in massive profits. They're holding their positions until they come back down to some area of demand. So basically all it did was come up here and it deviated. It scooped up all this liquidity, okay? All from this area of this original breakdown, scooped up all that liquidity, and just took it right back down, right? So you got to be super careful of these breakouts and becoming liquidity for somebody else. And then exactly that, but just vice versa down here, right? So you'd see this massive reaction off this level. You go, okay, there's support here. Maybe it lines up nicely with the level over here. yeah, a bunch of wicks over there. So, okay, here's some support. And if we flip this level, I'm going to short. So possibly you went short and you said, oh, okay, it flipped the level. I'm shorting. I'll short a back test kind of thing on this wick, and I'll target somewhere down here, and my stop loss, I'll put just below, or sorry, just above the level kind of thing, right? And you would have gotten stopped out, or even say you entered right over here, because right here looks like a pretty decent breakdown, right? That's a pretty decent breakout. So you'd say, okay, nice. I'm going to short here, and you'd be in profit. You go, sweet, I got it. And where would you likely put your stop loss, right? Probably above the previous high, right? So this little wick right here was the previous lower high on Bitcoin, and you say, okay, just above that level, I'll put my stop. And then so what does price do? It hunts your stop, wicks all the way up, okay, stops you out. And so what does that do to shorters, right? It forces them to buy back at a higher price, pressuring the price to pump even further. Okay, so all this demand is just eating up that liquidity in this area when you think it's coming down and people are loading up, and shorters are having to buy back in, and then we see what happens, right? So of course now you're probably asking, well, how do you do this successfully then? What are you looking for? Like, how do you, if you're waiting for candle closes below or above, and then you enter on the back test, when there's just going to be a wick that comes up and stops you out anyways? Well, this is what I do. You want to see a flip of a key level on high time frame first. Okay, so you want to zoom out to the daily, I would say minimum, and then you want to find that key flip in support or resistance, and then you want to zoom in on the lower time frame to find the setup. So let's just find an example here where it looks like we've broken a key level, right? So let's go right here on Bitcoin. Okay, so this looks like on a high time frame, you're on a 3-day, you go, wow, there's definitely resistance here, and we've flipped it. Okay, so this is a key level. So yeah, potentially this could have just gone straight up, right? We don't know that at this point. You're seeing, you're not seeing this price. So you start to zoom in. Let's see what we get. So now we're zoomed in on the 12-hour, and what you're looking for is a continuation of the trend, a continuation of flipping SRs on lower time frame to find an entry, okay? And so this was that key breakout that we saw in high time frame, huge breakout and back test, right? But what are we seeing on a lower time frame now? Are we seeing a continuation of minor levels being flipped, right? So we had this level of support and this level of resistance. Okay, right there, you see that? Okay, so we had this minor area of consolidation as support, right? And obviously resistance above, but then we broke back below that support, and then it was clear resistance multiple times here, right? So it's flipping back the other direction, right? It's flipping support into resistance versus we want to see the opposite. This is what we want to see on a lower time frame. We want to see this range flipped into support, this resistance flipped into support on lower time frame, right? And that'll give us our entries at these areas of support on low time frame, as long as we can see a continuation pattern of the trend, right, on a lower time frame. But we just didn't see that. It actually went the opposite direction, flipping support into resistance. Okay, here's an example of where this went well. So obviously we had resistance here, right, which we flipped into support, okay? So this was your previous resistance is now support, okay? So that was our ceiling. I've drawn a zone. And what did we see after that? Let's zoom in on the lower, we're already, sorry, on the 12-hour, but on the high time frame, you would have seen this, right? So on the daily or 3-day. And what did we see after that? And though this was a powerful move, we still saw that same structure on the lower time frame on the 12-hour. Resistance flipped into support, right? Resistance flipped into support, resistance flipped into support, resistance flipped into support on lower time frames. So it was a telling sign that you see this continuation of this trend upwards. And what else did we see? We covered this earlier. Those diagonals, resistance of diagonal flipped into support, right? You see that? So using this strategy of SR flips alone can seriously boost an edge in your trading. So try it out, do some paper trades, do some fake trades with it first, see how you're doing until you actually risk your own capital, and always manage your risk accordingly. Thank you so much for joining. I hope you enjoyed the video, and we will see you on the next one. Bye.